Hey, good morning, traders and investors, and welcome back to the Wednesday live stream show. I'm your host, Ben at Tyndall, tradinganalysis.com. We appreciate you guys taking time out of your Wednesday mornings to join us. Markets, I should say the market volatility from the January 24th lows continues. We're already half of the way through February. We've got the January Fed minutes coming out this afternoon. Should be an interesting event. If we look back to the December minutes that we got in January, it was actually a few surprises in the language that kind of spooked investors and actually ignited that decline that we saw through January. But we've been a bit more constructive since the lows back on the 24th. When we met last week, we discussed kind of the proving ground, as I was calling it, for the indexes that really needed to hold in order to see upside continuation, turn the structure into a motive trend establishing wave. And Thursday, we got January CPI data, and the CPI data was obviously very hot. I don't think anybody questioned that. Looking at the way the bond market reacted, looking at the way the CME Group's probabilities of a rate hike into the March meeting were impacted as a result of that CPI data, markets pretty much immediately reacted and began to price in a half a point move in March instead of the quarter point move that was previously priced in. So very curious to see how the markets absorb the Fed minutes this afternoon. Do we get any additional surprises? Are we able to ink out the recent low and see that continuation move that we've been after? Or is this truly just a WXY like we looked at as an alternate count with the recent, I guess that would be February 2nd highs, technically in the S&P being the X wave, and we're moving lower. We'll get to the charts in just a minute. Before we get to the charts, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Morning, boys.
Welcome back. Welcome back. Did you guys enjoy the Super Bowl?
Yeah.
You know,
I didn't have any stake in either team, so I was there for the commercials.
it seems to be the case. Alex, I don't know if you watched the game at all.
No, I didn't.
Yeah, you know.
Well, they said it was. I think from the rating standpoint, like 113 million people watched the Super Bowl. So it was highly visible. For sure.
Oh, absolutely. It was an interesting game. I think there were some questionable calls. Somebody asked me at church leading up to the Super Bowl, you know, who I wanted to win, and I said the 49ers, but they didn't quite make it to the playoff game. So
they didn't make it. Yeah.
They tried. So anyway, what are you going to do? I grew up in California. You know, San Francisco 49ers are near and dear to my heart. But what are you going to do? So hey, man, everybody, good morning, traders, investors. We appreciate you guys tuning in. We're going to get to the charts. We're going to switch up the order flow just a little bit in light of the movements that we've seen in gold. Gold's been kind of challenging those levels that we discussed previously in the triangle. We'll get to Alex in just a moment. I see a couple of chart requests. We can absolutely handle those. What else? We had retail sales this morning. I think Fed minutes this afternoon will be interesting. It's all about maintaining the retracement at this point from the recent rally off of those January lows. So halfway through the month already, and just a stone's throw away from the March Fed minute, or the Fed meeting, which I think is the next big event markets are after. What's your take, Alex or Terry? Any thoughts on current situation, quarter point, half a point? I know, Alex, I think you're leaning more in the quarter point direction.
Yeah, I mean, I think this emergency meeting which they held was actually to align, because I think Bullard was going a little bit more haywire regarding lifting rates up to 1% very quickly, even 50 basis points. So I don't think so. I mean, it's possible, but I will give more chance. They will go gradually, meeting by meeting, which is more predictable for markets. I think in this situation, if you take the current state of economy and also geopolitical events, they want to be a very predictable Fed, in my opinion.
Yeah, and Bullard actually walked back some of those comments, just kind of reiterating the fact that he is just one policy member. So we'll see how markets react here into the afternoon. How high can oil go? I saw a question regarding that. If you look at our Trading Analysis YouTube channel, I put out a video, I think last week, perhaps it was the week before, in regards to crude oil. We do see a zone. What's crude doing this morning, boys? You guys, I haven't checked in this morning. Let's pull this up here. Okay, so we are bouncing back from that 91 area, 90 and a quarter, 90 and 3/4 area low. So it's kind of an interesting development. If you look at the chart of crude oil, we see the pattern as a potentially expanding diagonal, which means that move to 95 could have technically completed the diagonal because it did meet the minimum requirement. But with this move down to 91, this technically could be B of wave 5, because with an ending diagonal, the 1, 3, and 5 positions need to be 3-wave subdivisions. So it's possible we hold that bid at the 91 handle area and do see a move up to 97.5. Alex will take a look at the chart of crude in just a few moments. And then we will also take a quick look at Bitcoin. We've got Crypto Lab tomorrow morning. I got a few emails overnight regarding the move back above 40K. Alex can take you through that, and of course join us for Crypto Lab. All right, I'm going to take them through the charts, boys. I'll be back on the other side. See you guys in a few minutes. Sound good?
Right.
All right, let's hit it. All right, good morning once again. Appreciate it. Let's jump into it. Hard right edge of the Motive Wave platform. We're going to take a look first at price action in the S&P 500. It's been quite the complex and volatile move, really, since the November 22nd high. We had the big move down into the December lows, rally back up to finish the year, and then we see this move down, try to hold this very short-term trend line. We retrace about 61% of that move, between 61 and 78.6% of that move. And then as we break under that January 10th low, that was the confirmation point that we would see this continuation lower. So in the S&P 500, the low that we printed back on the 24th of January, and January 24th was quite the volatile session. Talk about whipsaw. We gap lower, sell off 3.3%, call it. And we actually had a sizable rally back from the low there. I mean, even if I just go to that candle, a 4.6% rally. So 3% to the downside, 4.6 to the upside. And from that low, we've seen evidence so far of 3 waves. In our Wednesday live stream from last Wednesday, the 9th, we noted the pre-market break higher that was beginning to occur. And this was, I should say, the proving ground for the index. This is where the markets need to put up or shut up, hold the support zone, rally to make a wave 5 high, which then turns the structure into a motive trend establishing move. And that begins to set up opportunity zones for trading in the wave 3 position. What actually occurred is we got a rally on the 9th. The rally on the 9th last Wednesday failed to exceed the February 2nd high, and in doing so gives us 2 possibilities. Possibility number 1 is that wave 5 was just a truncation, meaning it didn't exceed the wave 3 high, and it still remains a valid impulsive wave as a result of the truncation. Alternatively, that was the X wave high on February 2nd. We're not a fan of the X wave count. It's still valid. It's still in the back of our pocket in the event plan A doesn't go our way. But if you look across the board, there were many stocks, there were many sectors, not many, there were some sectors and industry groups that did achieve 5-wave moves, meaning we didn't have truncation, we had a clear 5-wave rally, and now we're seeing a corrective retracement. Take the Dow Jones Industrial, for example. If I take you to the chart of the Dow Jones, and don't worry, we'll get back to the S&P and discuss it in just a moment. But looking at a chart of the Dow Jones, we actually do make a new high in wave 5, and it's a closing high. So we don't have to worry about this being a truncation. And we've since seen a move down to about a 50% retracement. Take, for example, the sector, the XLK. This is the technology sector. And if I take you down to a 15-minute chart, and if we look at the way price action responded from its January 24th low, we have that same diagonal up, 3-wave retracement, 5 waves up in wave 3. Wave 3 was beyond equal to wave 1. Wave 4, notice in the A wave low, ultimately met equality to wave 2. And then, if you move up into the February 9th high, the XLK managed a closing high, a new closing high, even on a daily basis. So, 5 waves up in the XLK is valid. It's valid. So while the X wave count is still a possibility, we are leaning more in the direction of upside resumption, and perhaps we do get that larger 2022 market correction that I've been talking about for the past 6 months, sometime later in Q2. So let's get back to the S&P. Looking at the S&P 500, we've got some clear objectives that we need to be considering. First of all, entertaining the idea that this was a truncation and looking at the decline that we saw into the 14th. The decline into the 14th is really best counted as a 5-wave move. It's possible that it was a 7-swing structure, which means 7 swings, A, B, C, either 5 waves in A, B, C, or A, B, 5 waves in C. So with this very directional looking trend, we've got to ask ourselves this question. Is this simply A of wave 2 and we're working back in B of wave 2? Or could this technically have been all of the wave 2 correction? If we look at where it found support, we found support just above the 61% retracement of the January 24th through February 9th high, including the truncation. That means if this is just wave A, we get a 3-wave move back in B, and the C wave will probably not equal the A wave. It could take us all the way back down to the 786. So moving forward, we see 2 distinct paths in terms of the bullish count. This count here would suggest we get a move back up to this short-term trend line resistance, which is sourced on the 4th, confirmed through the high of the 12th, offered resistance February 2nd. We get above it into the 9th and the 10th, and then we fail it. So that zone, notice, does line up with about a 61% retracement of this decline off of the high from the 9th. That's the zone that if we do 3 waves into, we could get another 5-wave shakeout. But what if we get into that zone and we just see immediate continuation? If we get into that zone and see immediate continuation, then I would consider the idea that we actually just have a big 1, 2, 3, 4, 5, 6, 7 swing move, which means it could technically be all of the wave 2 position. And in fact, if you look at the Dow Jones Industrial, the Dow Jones Industrial kind of leans in that direction. 1, 2, 3, 4, 5, 6, 7 major price swings. So it could technically have just completed the wave 2 low. In regards to those very directional looking 7 swing structures, while they are rare, they don't typically occur. Generally, you have a nice, clear, discernible 3-wave structure in a wave 2 position. But if you consider the market psychology behind the recent move, there's been a lot of uncertainty. We've now got the geopolitical uncertainty, the Russia-Ukraine situation. We've got last week's CPI data from January. We've got probabilities of a quarter or a half point move into March all over the map right now. So the idea that the wave 2 was actually 7 swings and it was a big shakeout move, trying to look motive, trying to look directional, shaking out all of the weak hand and uncertain investors, actually kind of fits the bill. It actually kind of fits the bill. So we're going to remain constructive. Now, what about the alternate X wave count? Because it kind of still looms overhead and is technically a possibility in the S&P, given the fact that we have truncation. And it's also a possibility when we look at the NASDAQ. The NASDAQ 100's chart has not seen as fruitful of a recovery, if you would, from its low. The structure does look a bit more corrective. We're going to get to that in just a second. If this was some sort of an X-wave high, either on the 9th or back on the 12th, it doesn't really matter. If this was some sort of an X-wave high and we are gearing up for a move back down to maybe 4,000, that will be confirmed on a break back under the January 24th low. And really, your warning sign will come if you get below this 618. That's kind of warning number 1. Warning number 2, which is the true concern, is the break under the 786. And when I say a break under the 786, we can have a little brief stop run through it, but we don't want to see like an hourly close under the 786 retracement. So confirmation to the downside where the bullish count is wrong is south of 4226.62. So that's the S&P 500. If we look at the Dow Jones, as we mentioned, the Dow Jones actually printed 5 waves up. Invalidation of trend is back at its January 24th low. If we look at the NASDAQ 100, things are a bit more concerning in that we're still technically trading south of one of the Elliott Wave channeling techniques that we utilize to help determine our 4th wave support zone. This is what we call the 132 channel. You take a trend line from the high of 1 through the high of 3, project your parallel trend line through the low of 2. We're technically still trading under that level. And if we zoom in off of the daily down to the 1-hour chart, we can see that really we've got 3 waves up. I wouldn't be as comfortable entertaining a truncation here for this wave 5, but there's 2 ways the NASDAQ is turning motive. Motive count number 1 is the motive diagonal. This count offers invalidation of trend at 13,880, spot 48, and this would suggest we're in an expanding variety leading diagonal. Now this gets a little bit out of sync with the S&P, but that's fine. The second way in which we can confirm a motive upside move is this. Let me take you over to our scratch count. And over here on our scratch count, if we open our minds to the idea that wave, and I know we've got a client at Trading Analysis right now who's looking at this chart saying, I told you it was a truncation. And I love it. I love the engagement that we have with our clients. We've got a lot of collaboration amongst members and in chat throughout the day. But we had been going back and forth on the idea of truncation. We talked with you guys about it in the live stream show not long ago. It's possible the NASDAQ 100 was a truncation in this wave 5, and this is just waves 1 and 2. That would put us more in line with the S&P. Regardless, we really need to watch the 618 and 786 retracements and then watch those January 24th lows. All right, so that's it from me. I've got a couple of chart requests. First up, I want to take you through the chart of NVIDIA. This was one of the requests that we had. I gotta say, the chart of NVIDIA is one semiconductor name that kind of challenges my overall analysis in terms of dismissing the X wave. This is a chart that still considers the X wave valid, if you would. However, we do have a bullish count here that would suggest this was just a big complex correction. You've got a 3-wave move down. There's a couple of ways you can decompose this. You could see A, B, C, W, A, 3 waves of B, C, X, and then down in Y. Both of them are valid. But from the low, back on the 24th, we actually have 5 waves up. And if you move your wave 4 over here, you end up with a triangle in wave 4. If you put wave 4 here, you have intraday overlap into wave 1, but on a closing basis, there's no overlap. So technically, NVIDIA did 5 waves up. And not just that, it did 5 waves up and then a big 50% retracement, and yesterday it was off to the races. While we're on the topic of NVIDIA, and I'm going to be putting out a video on this later on, actually it'll go out tomorrow, looking at a chart here of the SMH. The SMH is the semiconductor industry group within the technology sector. The SMH did a big old flat correction. 3 down, 3 up, 5 waves down. Interestingly enough, we just did another flat in the wave 2 position. Taking you from the 1 hour down to the 15-minute chart, we do 5 waves up with an extended 5th wave, down in A, 3 waves back in B to the 1272, big 5-wave shakeout in wave C. Notice wave C was just shy of the 1272 external retracement of B, and it was right at a 61% retracement. We're now seeing continuation from there. So unless we start to fail back through the lows from the 14th, that's looking like a constructive chart for upside consideration. There's many names within this industry group that I'd like to take a look at, but we don't have the time this morning. If you want to test drive our services, we'll be live with clients in just a bit on our member webinar. The last chart request that we had this morning here was Facebook. And I got to say, Facebook is one chart that I don't have a good feel for. Looking back at Facebook, this chart has seen a lot of overlap. This was one that we never really cared for, just given the fact that identifying clearly isolated corrections was a little bit more difficult to do. It left multiple counts as a result of that. It was a bit more subjective. But really, if we just take a step back and look at the weekly chart and draw a trend line from the 2018 high through the 2020 high, that's kind of where price action got shut down recently, and we've now seen a very sizable decline. Getting you down to the subdivision of what's been occurring, this is a nasty chart. A huge acceleration gap to the downside. We're looking at, like a 24% gap move. You get a directional 5-wave swing. Then you get this consolidation effort that can be counted as a triangle. Down in 1, up in 2. Wave 3, we thought might stop at the 2618. It's not showing any signs of letting up. Could be in a flat here. But until this finishes its structure and turns back into a motive sequence, not much we can do with that one. All right, hope you guys enjoyed the content. I'm going to jump back over to the team. What do you guys think? X-Wave, nay? Yay? Maybe?
Well,
still
at this point, Bennett, you're throwing both the valid counts out there. So that's what we have to do. Is we're not going to pick one side or the other until we have the highest level of conviction. So, I appreciate all the work you do to give us the multiple views. I mean, each of us individually have our own background experience and whatever, and we can add that to what you deliver to make our own decision on which direction we're leaning toward. But right now, we're kind of tentatively hoping that we're going to push it to the upside, but we cannot discount the fact that there's still an opportunity for the bottom to fall out of it. So.
Yeah, very, very well said, Terry. Now, you bring up an excellent point, because a lot of times people have this this view of Elliott like it should always give us the absolute clear direction of the market. And at times, there are instances in which we can say, hey, that's a really high conviction, 80% plus probability, way too low. And then there are other times when you got to take a step back and realize that dynamics are changing, and that's when we've got to present the multiple counts to our clients and use the key either validation or invalidation levels. So good stuff. All right, crude oil continues to move here, 93.62. Alex, sir, we're going to switch it up. Typically, we transition into Optima with Terry and take a look at sector rotation. We're going to jump into macro with Alex today, given the fact that we did see that move up in gold starts to challenge those key levels that we talked about. And then we'll cover sector focus at the end there. So, Alex, sir, you about ready to rock?
Yeah, let's go.
All right, take it away. We'll catch you guys on the other side.
Okay, guys, let's look first the US 10-year yields, our levels are being challenged currently. So we are trading at 2.01. There is a Fed meeting. There has been a lot of rumors regarding the increase in rates officially by the Fed. 50 basis points, 25 basis points. I think, as I said, I think they will go with 25 basis points and give visibility to market. Maybe they're going to hike a couple of meetings up front. In a sense, they will announce that, but I think that market can deal with that if everything is transparent. So in that respect, I will still hold the view we are trading around the possible reversal. We are trading at our current target as we've been tracking this for almost from some around here in this potential 5 waves. So we are exactly at equality. And also we have this divergence on the weekly level, which is still functioning. So maybe today minutes will not be so hawkish, and we get some type of a pullback, which will indicate that Fed will take this gradually. and we will see some type of a move down in some sort of an X wave. So I'm still going to keep this wave count. We didn't breach this so significantly in order for me to change this wave count, so I'm going to keep it like this. If we break this on the upside, then we will have to throw our towel on the floor and actually turn this into a more bullish wave count, which will be 1, 2, up in 3, 4, and 5, which will be very bullish for the rates, even in the 2023. So on the European front, same situation. We are doing some type of a complex wave structure here. Wave 4 is still down there. I still think this will last a couple of months more until we see this correction over. But as long as these levels hold, and this is the price chart inverted of the yield, just because of the Elliott Wave count is a little bit more clearer. I still have a view that this is a very nice 1, 2, up in 3, down in 4 and 5 pattern. So I will still look for a possible wave 4 here in some type of a complex form, and then a continuation in deflationary manner on the upside. As the dollar is concerned, our wave count is still holding. We didn't breach any significant level to actually announce that this move actually was a finishing move of the dollar on the upside. We are starting to see some type of a bullishness here. It might be also retracement, but for now, this possible ending diagonal wave count in this fifth wave still holds. We didn't broke any key levels actually to put this B wave here. So I'm going to hold to this wave count still. And in that respect, this will be 5 waves up in A and down in B, and 5 waves up in C. C finishing in the ending diagonal, most likely go to 98 to 99 in dollar index. Any breach of the levels on the downside, well, will be the major wave count invalidation, comes around 94.60.3. No reason to change this wave count yet, especially if we see this move up and the move down, which was actually can be counted in 3 waves. So there is a reason to think we might get an ending diagonal as some type of a finishing touch in the dollar index. As the oil is concerned, I still have this longer term wave count. This is a pretty sizable wave count, this being from 2008, 148 high in oil as an ABC, and then I consider this to be an ongoing flat in the X wave. We have breached the very strong key resistance levels, which goes, as you can see, this trend line goes from 2008 and then 2012, and then we touched it in 2014, and now we touched it at 2021 in October. We get a pullback from there, but a continuation. There is also wave count. This is some type of an expanding ending diagonal. I will wait a little bit for that, because in that case we will have to breach down from this trend line even to this 200 moving average to 64. I have this a little bit more bullish, looking this overall wave count, looking oil to be in 1, 2, and I look this as some type of an expansionary wave 3 reaching 101 to 110, pullback in a wave 4 down to this resistance line, back to 80, and then move up around between 120 and 130 for this X wave. This is a pretty sizable, big time frame wave count, where I see this as a ongoing WXY, with oil from these levels going down into an ABC pullback, even back to this 1810 levels to actually complete this form. Short term, I do see a potential reversal with 10 or 15 bucks more on the upside, a pullback in a wave 4, and then a continuation up in a wave 5. As the gold is concerned, we are still tracking a triangle. I have made a little bit of changes in this D wave, 0.618 for the wave D. As you remember, my wave D was here, that was invalidated. I'm still not ready to put the gold on the upside with this outlook in the dollar index. I still think we are in some type of a complex D wave. My next level, 1912, where I will have to throw the towel if we go above this level. So I will keep this as a complex D wave with another push down. Back to 1780 for this triangle. It has been a very complex triangle. RSI on this daily level is touching some of the potential reversal levels. So I'm going to keep it still as a triangle. I don't see still a 5 waves up here and a breach of this key level. So I will still stay with the possibility we get some E wave on the downside. And silver especially also is still a little bit more confirming that we are reversing to the downside, and I still do think we will get we probe upper channel of this corrective channel on the WXY, and we are turning lower. So I still think we will get one more push down to 2021, and then we're going to reverse in the new bull uptrend on the silver in the rest of 2022-23. So let's go to the cryptos. Bitcoin still in triangle. We do see this move up as a confirmation up to this 200 moving average as the wave A in a possible ABC in the wave D, wave E, and then off we go. We still track this triangle as a possibility for now. The key levels actually didn't break on the Bitcoin, so we're gonna keep following this wave count because for now it is functioning well, especially taking in consideration from this low, we are now potentially tracing a full 5 waves on the upside, which will mark the potential wave A or 1 on the future move on the upside. Definitely wave D pullback around 40K will be interesting from several aspects, and I will go more into that in the tomorrow crypto lab. So back to you, Bennett.
Much appreciated. Thank you so much, as always, Alex. Very curious on that Bitcoin as well. I'm interested to see if we can complete that green wave 5 that you had there, where that B wave takes us, and then that next move up is going to be obviously very telling, either an equality wave C, or if it is some sort of an upside continuation move, it could get even more interesting. So thank you, guys. If you are interested in more crypto-specific coverage, please join us tomorrow morning. Join Alex 9 a.m. right here on the Trading Analysis YouTube channel for Crypto Lab. All right, we're going to hand off to Terry. He's going to take you through sector focus in Optima, and then we'll wrap up and let you guys get on with the rest of your day. Mr. Long, you ready to rock, Terry?
Okay. Yeah, just
no worries, no worries. Watching pre-market here, we can see S&P ticking down just a bit, 44, 42.75. Looking at NASDAQ futures, 14,516. Looking at crude oil, still holding that 93 handle bid. We've got about 6 minutes till the cash markets open.
all right, good to go.
All right, sounds good. We're going to take you into sector focus. Catch you guys on the other side.
Hello, traders. I'm Terry Long at tradinganalysis.com with your weekly sector focus. So we just have just a month to go before the highly anticipated March Fed meeting, where markets expect at least a quarter, but maybe a 0.5% rise in the short-term interest rates. And the question in everybody's minds is, have the markets fully priced in this move? I'm thinking very likely in any case, the market already knows that it's coming. All right, so let's take a look at what happened in last week's trading action here. Trading in the S&P has been mostly sideways to lower for all of February trading, but volatility is still at hand, as you can see the large swings that we're still getting here. Now, last week, the S&P declined 1.82%, settling in at 44.18, just below January's month-end closing price. And the NDX saw a deeper decline, falling 3%. I'm missing my label here, but falling 3% last week, with the majority of the loss coming in on Friday's action. And crude supplies remain tight. Crude oil topped $94 a barrel. The energy sector continues to see gains, rising last week 2.19%, and secondary to energy was the materials sector, up 1.06%. Financial sector held flat for the week. It's right there, essentially neutral, while the remaining sectors saw declines. And declining 2% or more last week were utilities, consumer discretionary, communications, real estate, and technology sectors. Let's take a look at this week. Now, this week started off with crude prices reversing sharply lower. And with that, we've seen the energy sector move down 3.39% through Tuesday's close. But rebounding early this week are the growth sectors. Led by consumer discretionary up 2.79%, technology sector up 2.46%. Joining energy with a move lower at the start of this week are staples, real estate, and utility sectors. And so far, in 2 days of price action, the S&P is back up 1.19%, and the NDX is double that, up 2.57%. Moving over here to our sector leader board. One moment, I lost my mouse. There we go. In the sector leader scoreboard, the energy sector continues to move further to the right. Right now, it's got a relative strength ratio of 110.6. Now you can see it's stopped moving upwards, so therefore that's a momentum shift. So the rising momentum has stalled in the energy sector, but it is still gaining relative strength. You just got to watch that play out there, but that's way out there, very high relative strength. The staples sector is also showing relative strength gains with this mostly horizontal moves here. Now the utilities, the materials, the financial, and the real estate sectors are all still seen here in the leading quadrant. There's a little bit of momentum fade happening here in the utilities. This one here is the XLU. These labels are crossing over here. Financials is continuing to gain momentum and relative strength, moving in the northeasterly heading, but utilities is rolling over. Real estate looks like it's deciding that it wants to possibly exit the leading quadrant for now. While we are seeing the healthcare sector in a weakening state, but it is crossing over from improving into the leading quadrant just as we speak. Down here in the weakening quadrant, you can see the technology sector fading lower, and we can see the colors change from green back to yellow, back to green once again. The color represents the weekly price trend action, and not necessarily the quadrant that we're sitting in. This green weekly price action is a positive when it's green. It means it's in a leading state. So even though we're still seeing technology fade to the southwest, we are getting some short-term strength back in here in the growth sector. And then the consumer discretionary sector is now bridged over into the lagging quadrant, as we had forecasted that last week. At this point, we can't estimate how many weeks it's going to stay in this quadrant, but we will continue to monitor this vector's heading for clues. And you can see here that the momentum decline has stalled, and now we're seeing a neutral to slightly positive momentum coming back in to consumer discretionary. Now, this change by and of itself is not sufficient to establish a full trend change. We would still like to see more of a hook formation and a rotation back to the northeast. Up here in the improving quadrant, the healthcare sector, like I said, it is just now crossed over into the leading quadrant. The industrial sector is making very small, short, slow progress. Okay, there is some small relative strength gain in the industrials. Mostly this sector is still having internal rotation, and it's just it's still trading in a long-term sideways range. Now over here, the communication sector, which has been deep down into the lagging quadrant, It has been showing a slow momentum rise, but it has yet to really make substantial relative strength gains this week. Now, I am just now starting to see that movement shift back to the northeast. All right, so I asked Alex to go ahead of me because I wanted you to get his take on gold. Now, could we possibly be seeing the ending of the triangle formation that we've been tracking for so long in gold? This price action in the precious metal has challenged our most recent swing wave low, and so what Alex has done here, he has changed this up, and I'll have to redo mine. But so we broke through just barely. We broke through what we had, this D wave back here. Alex now thinking that we're working some kind of more complex triangle formation here, possibly. So we'll be moving this out and adjusting this to match Alex's wave count. So patience is still called for here as we wait to see, do we get upside progression, which I think, that will be another clue, or do we get further rejection? Now you can see gold traded up. It got sharply rejected from that 1875 level right back down. And even though it's up slightly, today's candle is up slightly, it is still starting possibly another downward leg there. So I want to bring you over here, take a look at these gold miners. The gold miners did stage a big rally this week with many up in double digits. But inside the weekly RRG, we're seeing a new group of blue improving weekly trends forming here in the improving quadrant. Most of these also with these lagging red vectors have shown a reversal hook formation as well. Now, continued volatility is in this sector, keeps the short-term risk high. So I just ask that you include that higher level of risk if and when you develop trade plans for any of these stocks right now. But right now, gold is starting to look positive. You can see even just this week, many of these last week were in double-digit rallies, and several of them are continuing to the upside right now. Looks like Harmony's the only one pulling back. So there's a big push happening in gold. All right, that's all for now. Bennett, back to you.
Much appreciated. Thank you so much, Terry. Is your audio still with us on this slide? Your camera froze, so just wanted to make
sure. Can you hear me?
Yep, we got you loud and clear. We just got a frozen camera, but it happens. Technical difficulties. Yeah, no worries, no worries. So hey, we appreciate you guys taking time out of your morning to join us. Members, we'll see you in about 26 minutes for the member webinar. We'd encourage you guys to check us out, test drive our services, tradinganalysis.com if you're interested. Either way, if you do enjoy the content, please subscribe with notifications, give us a thumbs up, lets the YouTube algorithm know to distribute it accordingly. Markets are open. S&P is quiet currently. Moderna's moving lower. I don't know if you guys caught our video on Moderna. We've got a short position on there. NASDAQ is quiet. Let's see what the afternoon brings with the Fed minutes. Appreciate you all. Be safe. Stay healthy. Hope you guys had a good weekend. Hope you enjoyed the Super Bowl. We've got 40-mile-an-hour winds apparently coming in here to Texas this afternoon, so yeehaw. And we'll leave it at that. Sounds good. Terry, Alex, excellent work as always, gentlemen.
Thank you, Bennett. Thanks, guys. See you later.
Thank you, Terry. Thank you, Alex. Have a good one. We'll see you guys same time, same place next week.